Hey, folks, is it true that 90% of new traders really lose 90% of their money in just 90 days? We're going to be sharing some things with you today that'll help you beat those probabilities. But first, let's take a look at what's going on with the indexes. I'm going to jump over here and just take a real quick look at the Russell. The Russell has been the redheaded stepchild for a couple of years now, but are we finally working our way out of the malaise? And will the job report today that was really weak encourage the Fed to basically drop the interest rates and then continue to propel the small caps back up to their past highs? I'm going to show you basically a monthly chart over here because we are at the beginning of the month. And as you note, this was the past high up here about the 211, 213 place. Almost made it up to the high last month. And then we sold off for much of the month of April. However, it looks like we're getting a nice little rally going into the first part of May. And we're continuing to push higher. Note, I like using the 8-period moving average because it is a really great line of demarcation on all time frames. Notice the price action this month has come down to the 8-month moving average and is rebounding from there. What about on the weekly chart? Let's work our way to the right. Similar type situation. We're getting potentially get a close today above the 8-week moving average, which is oftentimes a prerequisite to a move higher. This next move up, depending on what happens with the Fed, could drive us into a lot of different directions. And so I'm really excited about this. And on the daily charts, though, we had a little bit of a consolidation, as you see here. And then after the Fed reported out on this day, we have broken out. I have a runaway gap here that could provide us the power to move on up back into these past highs. I would look at it to be one of those kind of moves where you zigzag from higher lows to higher highs to higher lows to higher highs until it finally gets up here. That's what I'm looking at for the next test of the Russell will be once it gets up here. Now, of course, it could throw us a total curveball and break down with any bad news, whatever. Hey, taking a test flight with the AutoPilot trading system. It's a great service and mentoring service. And so I encourage you to check it out. It's a value about $1,700 per month, but you can test drive it for approximately $95 per month to go for 3 months and see how, and you do want to do it before the increase. And there'll be a link down in the description. So let's go ahead and jump in and look at what's going on with the other stocks. Let's start with the spider. With the weak jobs report this week, what we're getting is it appears as if, I don't know if we'll have the volume or not, Anil, but it appears like we may be getting a follow-through day to the rally attempt that the IBD always talks about. I know now that we've broken out, and here's what we're seeing with the S&P. Notice we had a swing up and then a drop from the moving averages down. This was the first higher swing low. We came up, made a new swing high, came back down, made a new swing low. And this was really, and I want to highlight it to folks, this was really an excellent looking pattern in that on Wednesday, the day of the Fed, we get an inverted hammer, which is a bullish reversal signal. Then yesterday, we get a really nice hammer right up into the 8-day moving average. And now we're getting a follow-through move with a big gap up this morning due to the poor jobs report. Look for us to continue to press higher. However, I'm looking for this to also zigzag its way up, at least back up into the approximately up into the past highs. And then as you see, we've got a trend line up above that on the weekly chart. We'll see if we challenge that trend line there that will work as a level of resistance on the S&P. On the NASDAQ. NASDAQ also similar type formation and pattern that we saw with the S&P. Price actions have now broken back above the 50-day moving average after a similar type pattern of a inverted hammer followed by a hammer closing slightly above the 8-day moving average, a gap up. Now we have to remember on the way back down, folks, if we did a testing on that, we may get the testing coming down into this gap right here. Draw that in, that gap right there. That should constitute a strong level of support, and it also contains the 50-day moving average. And so what that may mean, we may drive up a little higher and then come back and test the 50. That would be fine, and then rally. A matter of fact, one of the things to look out for is if we get all the way up here, run all the way up to this downtrend line here, that's where we may stall, and we'll wait for a pullback to build momentum so then it can bust through that and go back up to this year's highs. Now, those were all-time highs on the NASDAQ as represented here by the Qs. So what I'm seeing, Anil, is the indexes look to be like they are jumping back in gear. The only other downside that I see is this nice rally is being made on lower volume. So that is a concern. But also we're going into the spring or the summer months. So sometimes those lower volumes during the summer months is a reality. What's your triple screen telling you about the indexes?
Interestingly, the weekly triple screen buy signal has not been broken yet.
Okay.
The daily, of course, was broken and looks like it's turning around. And since today, actually, MACD and RSI has definitely reversed, gone into the positive territory, but waiting for the EMA 8 and EMA 20 to cross.
Okay. And
that's about true for all the indices.
I agree. But it is a good sign, I think, to have the price action, especially on the NASDAQ, back above the moving averages. So I want to share with you really quick. Here's what we're doing. This was our P&L from last year. And then here's what we're looking for. We had a really nice pickup for the month of May. Actually, so funny. I finished off, I think last week, I was almost flat the market, with no positions whatsoever. And with the pullback that happened after the Fed, we actually filled out on almost all our positions. And so we're getting a nice reversal today to the upside. And the profits have, we're back in line, heading the right direction, paralleling my 40% line, but a little bit behind schedule, and that's fine. We'll just wait for that to take place through the year. And so here's what we finished up about 11%. And one thing to note, the Russell also turned positive on the yearly. It's still below its all-time highs over here. So, let's jump over and take a look at a few of these stocks that we've been looking at. Here's the question. I love this. Have you ever wondered if government's intelligence might be a bit more artificial than you thought? Today, we're not just talking about sci-fi, but we're going to be revealing that one of our top stocks is actually turning the joke of government intelligence into a reality by providing AI services to the federal government. So stay tuned until the end, because we're going to talk about finding out who's behind making Uncle Sam a little smarter. So we're focusing, as you probably figured out, on AI stocks today. So Nvidia, Anil, I know this has been on your list for some time. Have you bought it already?
I haven't bought it, but it does have a buy signal on a daily chart today. Week chart was always on, but it had a sell signal on the daily chart a couple of weeks ago, and now it looks like it's turning around for real. So I'm paying close attention, and I'll probably get back in there with a half a position, and I'm looking for a little bit more confirmation.
Excellent. And NVIDIA just announced this week that they're doing some work with Microsoft, some integrations for generative AI with them. I agree with what Anil said. NVDA, really nice breakaway gap. And now it's back above all the moving averages. It has a little gap right here. Anytime I would pull back towards that gap, I'd look at potentially buying NVDA. Meta is next on the list. And you can see Meta going the other way for one of the Mag 7s. After earnings fell down, it's doing the typical earnings thing. We had a death cross here of the 8-day moving average dropping below the 50-day moving average. Price actions moving back up into the gap down. And so I'd be looking for Meta to potentially stall out prior to getting to the 50-day moving average and fall from there. Next up is, believe it or not, Microsoft. Microsoft is also coming through with some really great AI things. What do you think about Microsoft, Anil?
Microsoft, let's take a look on that thing. I'll have to wait for the MACD and RSI to go to positive because it looks like it's turning, but it's below the 50-day line and barely touching, I think, at the 20-day line. So I'll wait a little bit.
Yeah, I can see that. Mark Minervini has a really good rule. He doesn't buy things if they're below the 50 or below the 200. This in case we're below the 50, let it prove itself and work its way back out. Next up is our buddy, Alphabet. So I have a question for you, a really serious question. Did you prefer Alphabet when it was actually just Google?
I don't know. To me, it didn't make much of a difference, honestly, based on the charts.
Okay. So on Google Alphabet, it's showing, I think, a little bit better performance than especially Meta. Just reached $2 trillion in its market cap and appears to be continuing to grow strongly. So is Google a buy or is this a buy for you?
Yeah, the weekly signal has been on, and even the daily has been on. So it's a buy on pullbacks like the way you do it.
Excellent. Okay. Yeah, I kind of like it. It's really close to where I could take a trade on this. And as you can see, from where it's at right now is below this is only about 2%. So you could even carry a 5% trailing stop on it, and it would take you back into the breakout area. So Google looks like it could be a buy almost immediately. And then PLTR. Now, Neil, you said that you're familiar with PLTR. Has earnings coming up here on the 6th. So are you a buyer here or would you be waiting?
No, I'll be waiting for earnings, even though I do have a buy signal today. But with earnings,
yeah, because earnings are after the market on Monday. So we'll just wait up on that. Some of the news on PLTR or Palantir is that it was just awarded a $100 million U.S. Department of Health contract. And so drum roll, please, because we're going to show you the company that is making Uncle Sam smarter. And that is, I'm not sure how to pronounce this. I don't know if it's Boz Allen Hamilton or Booz Allen Hamilton. It's one of those two. But this is Ba. Now, I'm not that impressed with the pattern on this, Anil. It's just basically kind of going sideways here. Has earnings coming up on the 24th, and I'm back into a level of past resistance. So I'm not that excited about it. Its volume is okay, just barely meets my requirements of being over 400,000 average volume in 50 days. But my momentum on the daily is out of sync with my momentum over here on the weekly. So yeah, I wouldn't be a buyer of BA right now. What about yourself? Is it Booz?
I have a buy signal since 5 days ago
right?
on that thing. And on the weekly chart, let me see. Yeah, my God, weekly has been on since about a year ago and has
Wow.
not gone away. So this is a uptrending stock that's been basing, looks like, and it might come out.
I did notice something when I was looking at it earlier is these moves over here. That move from here, it's a stair stepper.
Yep.
If you step, rally, step, these rallies are about 22%. So from that aspect, yeah, it could be an interesting opportunity. Maybe it has about 15% left in it to the upside before it flattens out and puts in another step. So, hey guys, as we've learned today, if you're starting your trading journey without a plan and mentor, the odds are against you. It is so important to have a plan, and you don't have to reinvent the plan. You can always subscribe here to the Market Tech Talk. I put up videos on a regular basis, so you'll get really good trading tips. And if you're more serious about it, jump in on the AutoPilot trading. All materials presented are for trading purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication or promise of future performance.